Well, that news in South Africa. We're seeing Access Investments and Securities in Nigeria, in the meantime, launch a series of mutual funds amidst the cautious optimism currently surrounding the equity market and the broader Nigerian economy. We're taking a closer look at what's coming to the fore here. And as the MD of the portfolio manager launching the fund, we get some perspective on expectations for the equity markets in the near to medium term from Winston Osuchukwu. And he joins us live from our studios over in Lagos. Winston, thanks so much for joining us this afternoon. Well, looking at activity on the Nigerian market, the NSE seems caught in a pretty tight trading range where we're seeing short rallies followed by pullbacks. Now, some forecasts out there suggest that we should be seeing a sustained rebound on the NSE this month. But there are those saying that there's an absence of near-term catalyst to actually get this going. So what's your view on where we're headed?
Thank you for having me, Alicia. Well, I think the market is going to trend. We have the winds. We have the winds behind our backs when it comes to the market. We will be in a trade. We will generally be trading sideways with an upward bias, given the coming in of the AMC and the work that is being done by the federal government in the power sector. We think all these will come together to give the market that final boost. And you have to understand that sustained upward movement is not going to happen until the retail investors come back into this market en masse, and the headlines that we see in Europe kind of abate a little bit, which allows the foreign investors to participate fully in our markets.
Well, that's some perspective or a bit of a forecast from a portfolio manager actually launching mutual funds in this context. So tell us a bit about the fund that you're launching and why the decision to launch these funds now, where there seems to be quite a bit of apathy amongst investors at this stage.
The number one decision guiding our launching these funds right now, especially coming out with a balanced fund, is what happened prior to this is there was a complete lack of allocation among retail investors. Retail investors were either all in cash or all in equities, and for 2007 to 2008, it was all in equities. The Access Balance Fund is going to give them opportunity to have a fund that's created that will allow them allocate their funds across different asset classes, and using a proprietary quantitative measure that we have that tells us when to switch between different asset classes. We think we can deliver significant risk-adjusted returns to all our investors. And given that people have suffered some serious losses from doing things by themselves, the need for professional investment and professional advice has just shown itself.
Well, that's the Access Balanced Fund. There's also the Access Fixed Fund, which is created to correlate less with the equities picture and the things that we see play out on that front. So run us through some of the detail there and what you're actually offering the investor.
Oh, sure. The Access Fixed Income Fund is going to allow our retail investors to participate in the federal government bond market. That market is purely an institutional market right now. The average retail investor is unable to build a proper portfolio of bonds, given the high amount of capital that's necessary. And leveraging of the Access Bank Fixed Income Index, federal government bond index, which we've had for about 3 years now, we think we'll be able to allow our retail clients to invest directly in federal government bonds in an actively and properly managed way, so they don't get caught in the wrong parts of the curve at the wrong times.
Yeah, so that's pretty much the investment case for equity or fixed income based funds right now, especially when you're taking investment risk into consideration. But we've got frontier markets like Nigeria having been in the spotlight recently for foreign portfolio investors. Given the options that investors face globally, though, why should foreign investors consider Nigerian based mutual funds?
Well, I think the first thing is, why should foreign investors consider Nigeria? If you look at Nigeria and other frontier markets, we really came out of the global financial crisis with a better national balance sheet, so to speak, when compared to everybody else. If you look at the debt overhang, both public and private debt in all of the Western markets, those are not present in most of the frontier markets, and especially Nigeria, which is significantly underleveraged. So if you're looking for a market that is definitely growing, the frontier markets are, Nigeria is growing. I think we did 6% GDP in the last quarter. We have that behind us. The other part is the way the mutual fund market is set up in Nigeria. The NSE and SEC now require mutual funds to hold all their assets with third-party custodians. What that does, it gives another level of security to foreign investors, that you can put your money to work and it goes directly, so that you take only the risk you're willing to take at every point in time. And finally, investing in frontier markets is all about location. You have to be local to really get into these markets. The information is not globally available, so it's kind of hard to do that kind of desktop investing as is prevalent in other parts of the world.